I'm Dan Pavlonis, Senior Market Strategist here at RJO Futures, here to talk about the currencies. We saw a second day, or actually a third day, of China intervening in the currency market. And the understanding is that the set rate for the renminbi is set by the government, and there's a floating rate, an offshore rate, that has been diverging from the set rate. So what we've seen is the government actually intervene and try to push the set rate closer to the floating offshore currency, get closer to the divergence. But also, if we look at the way that the renminbi or the yuan, whichever one you want to call it, float against the euro, the market has actually been diverging. We've seen the euro sell off or actually move lower over the last couple of years, where the renminbi hasn't actually moved that far away from where it has been over the last several years. So we're seeing GDP shrink in China. We're seeing the numbers start to devalue, and the economic numbers come off. We're also seeing imports and exports slow down significantly. And what does that all mean for the Chinese government? It most likely means that they're going to have to continue to devalue until they get a little bit closer to where the euro is trading at. And how does that affect the U.S. markets? Well, we've seen the stock market sell off yesterday and then a big ramp up to going positive. And if we look at it at more of a stimulative perspective, that can possibly mean if China grows because they're stimulating the economy based on currency, that might see an investment for U.S. companies and numbers showing a little bit better. But how does that affect the dollar index? And that also can roll over into the Fed maybe pushing rates, any rate hikes a little bit further into the end of the year, or maybe even into 2016. The problem with that is 2016 is election year. It's probably most likely that any kind of rate hike is not going to rock the boat ahead of elections. And then also, we might go through this longer period towards the end of this year, as the Fed might have to see and evaluate how this would affect the U.S. economy. So if you have any questions, feel free to give me a call. Dan Pavlonis, Senior Market Strategist. For all investors.